Hello, everyone. This is the DeFi Summit. We're going to be talking about investing in DeFi. We have Leslie, Miko, and Adrian. We have Leslie from GBV Capital. We have Miko from Gumi Cryptos Capital. And we have Adrian from Liquefy Labs. We're going to be talking about investing in DeFi and how each of you, in being venture capitalists, how you invest in DeFi. So I think to start off, if everyone can introduce themselves, how you got into the space, and what led you to start really focusing on DeFi and investing in that space. I think Adrian, do you want to start?
Sure. Thanks, Nelson. So my company's name is called Liquefy Labs, and the parent company Liquefy, we started off 2.5 years ago. We have a huge focus on asset tokenization, predominantly with STO before. And since last year, we started to, we knew that STO hasn't reached its expectation yet, and we start to kind of find other mechanisms on achieving our original vision, which is to bring on asset, no matter it is real life asset or any kind of asset, into crypto space and democratize the access to investment. So we start to approach DeFi in a sense from an investor perspective and also from an incubator perspective, whether it is synthetic asset exchange, whether it is AMM, but intentionally for real world asset, or even for data oracle. We have a first-hand experience with that. My personal background is with asset management. Before I joined the crypto space in 2017, when it was still a very bullish market. And before that, I was with BlackRock Asset Management in New York, Singapore, and Hong Kong. And thanks for this opportunity to discuss with you guys and how to invest in DeFi.
Miko, what about you?
Yeah, so I really my local cafe actually had a Bitcoin checkout, and at the time I got kind of interested and I thought I would play, so I started mining Bitcoin with the goal of buying a cup of tea. So this is kind of how I got my start in the space. I think as soon as I started figuring out what it was, I became really hooked, because I've been in Silicon Valley for about 30 years and working on open source software. And as soon as I understood this to be what it is, which is kind of the next quantum leap in the development of open technologies, then I really just kind of got hooked, right? So with respect to kind of DeFi investment, my fund, Gumi Cryptos Capital, has made investment in 1inch, Vega protocol, which recently did a coin list, Idle Finance. We're super excited about them. Stakewise, which is sort of an Ethereum staking financialization, and we have a number of other DeFi projects that I can't yet announce or talk about, but we definitely got sucked into the DeFi space really as a function of this being sort of an obvious killer application for the blockchain technology, and this emerging internet of value. So, we do see that, that this whole DeFi space is the killer app for blockchains. And, this is going to be, I think we're all headed towards, $1 trillion TVL and beyond. So, it's going to get really big soon.
Hey guys, thanks for having me. This is Leslie from GBV. So I've actually had a pretty boring background. I was in traditional finance for 15 years, doing structured products. So I was in New York. I was at Goldman doing CDOs. So if you watch The Big Short, I was not there, but I was on the same team. Then I was at Merrill. I mean, that's the boring part. At the end of it, it was all like regulations, and it wasn't just regulation. It's just the way they handled things. And I just felt like this is kind of boring. Is this where my life is going? And I bought Bitcoin in 2014 and kind of held it, and just decided in 2018, let's just do crypto. And after that, I joined Binance. I first went in as the OCC desk, but I became head of all sort of institutional trading on the exchange, large traders as well as OTC. And after that, I worked at CoinFlex as a chief strategy officer, sort of hiring the tech team and designing product. And last year, DeFi summer, I started farming the compound round trip trade, Wi-Fi day one, and Yam, war, magical unicorn rainbows, and we just started farming a lot of stuff. And I said, hey, this is why I'm here. I'm here to kind of do these really interesting structures and sort of changing the way finance is done. And so I decided, let's just start investing, because this is the stuff I feel passionate about. And so GBV was founded along with working with our partners at Genesis Block in October 2020. And so we've been around for 6 months, but actually me and my partners have been in the space for 3-4 years. So thanks for having me here.
That's awesome. I absolutely love the avatar. I think it's very in crypto for sure. So great to have everyone here, and such great experience from the three of you. So I think when you're looking to invest in decentralized finance and DeFi, what are the overarching theses that you kind of look towards when it comes to finding assets as well as investing in them? I think we could start. Anyone that wants to go first, and kind of go from there.
Yeah, sure. I mean, I can start. This is Leslie. So for us, I think the main thing about crypto is it's startups on an accelerated. It's startups on steroids. The market changes so quickly. It's really hard to build a moat. The moat you really have is tenacity and willingness to try new things and willingness to accept new conventions. So for us, by far the most important thing, because we invest in all sorts of different projects, whether it's NFT, infrastructure, and DeFi, the most important thing are the founders. Are they here to stick for the long run? Can they handle stress? Can they handle a quickly changing world? Can they handle crypto Twitter? Can they handle Reddit and Discord? Do they have these sort of what it takes? Because generally that's what we see as the greatest sign of success. So I'll just like to focus on that on our side.
Yeah, absolutely. I mean, I'd love to concur. Obviously, it is all about the people. It's an extremely dynamic environment. As Leslie mentioned. I think if we were to kind of add anything about that, that's in some ways the purpose of my show. So I have a show called the Miko Bits Show, miko.com/bits, and we largely spend a lot of time interviewing in long form founders. And one of the things that's so interesting is that we really want to make sure that people not only are reading and understanding kind of Solidity smart contracts, but they're also starting to understand the people behind the DeFi. So I really think don't have a ton to add, but I just wanted to say that shout out my own show, because the soul of it is, who are these people? Things like what motivates them and what is their grand vision. These are all, I think, really important criteria to understand, as because if someone's really just looking to make a quick buck, it doesn't. They're probably not going to survive or last long.
Well, I actually agree with both Miko and Leslie. And when we look at projects, not just from an investment, but also from an incubation perspective, I think it's really to find someone who can ride through the bull and bear market cycle. As you see, a lot of this project in 17 actually revived last year when DeFi emerged, and they kind of tilt around the angle, and ultimately they emerge, and a lot of that like Aave, SNX. So I think it's really about the patience and the mentality to deal with the market. So a lot of times when we talk with, obviously some of the founders want to make a quick buck, but when you look at the broader crypto space, how do you understand about the macro market, not just about crypto, but overall the financial market, because we're looking at DeFi. The mentality itself of the founders will help out for the long run, 4 or 5 years down the line. So I think that matters mostly, instead of just the white paper and on or the concept itself, because you see some of the decks out there, tons of decks out there, but 1 or 2 of them actually invest a major by really good investors. I believe that it's not just about technologies, it's also about the founders themselves who have the charisma to attract investors like us.
Awesome. And in talking about long term, it seems like everyone here in the stage really, obviously looks to invest in the long term in crypto. But as we know in crypto, trends really come and go, and obviously you could be at the top one day and then be completely gone. How do you manage both? What do you see? What is your vision of what is long term in terms of how long is that? And when do you kind of how do you try to figure out whether what you're investing in is a fad or whether it really has potential to continue to exist in the space?
I mean, I think from my side, personally, as a personal investor, I'm with Warren Buffett, which is the best holding period is forever, right? So that's a good holding period. I think from the fund perspective, we obviously have to have a fund life cycle, right? So, those are classic kind of venture horizons, right? So, a 10-year fund will have a life cycle like that, but I think in DeFi, that's like 100 years of DeFi. So like, in essence, like, we really need to reason about how these things play out. We don't have a liquid strategy, so we don't flip coins, and I think that in a way it aligns us very well with founders because, we're in it. We're in it to win it, and ups and downs happen, but we're just going to stay in the trenches with them, and hopefully play for the end game.
Yeah, this is a bit of a open-ended sort of question. What is considered long-term? So the way I'd answer it is, I've only been in crypto since late 2018, so that's just two and a bit years. But if you look at the narratives, they change every 3 months. So when I first joined, it was OTC desks still trying to do a lot of volume, Circle killing it. Then beginning 2017, 2018, it was IEOs, and then everyone was doing IEOs. Then late 2018, it was futures and a lot of lending and futures. Then it became DeFi. So I would say if you ask me that, long term in crypto is like 3 years. How long has DeFi been around? It's just over 1 year, right? So if you think about it, so it's not. I mean, I don't know if it's a question about investing horizons and so on, but if you ask me what's long term in crypto, 1 year is very long term. Let's be very frank about that. And I would also say VC investments in crypto is very different from VC investments in traditional tech. VC investments in traditional tech, it's you throw money at like 50 different projects, and they need Series A, then Series B, then Series C. And when I talk to guys from traditional tech, they're always saying, okay, I feel like their value add is knowing the Series A. I know the Series A, that's why I give you the angel check. If I'm Series A, I know the Series B, that's why I give you the angel check. Oh. And it feels like there's a lot of dance around the financing. So I feel like this is just a point I want to make about crypto VC. Crypto VC is like angel, and then it's list. You know what I mean? There's nothing in between, and so we focus a lot more on product and helping the helping the projects out on the product. I think the trading part gets a lot of bad press, but it's just the nature. It's just the nature that you go from angel to listing very quickly in crypto, and so you got to think about things in a different way. That's just a point that I really want to bring up.
It's funny because I actually talk to projects and sometimes how they look at the investors selling the tokens from a positive perspective. They're saying that once an investor sell a token, there's actually new users for the project because liquidity enable new users adoptions for the project. And I agree with Leslie, 3 years is actually a very long time in crypto. I think it is also, if you're thinking from a investor liquidity perspective, there's a huge reason why we are not raising a fund ourselves, but we invest out of our balance sheet, because once you have a fund, you have a mandate to follow, you have a fiduciary to LPs to liquidate the portfolio in a certain time frame, whether it's 7 years, 5 years, 5 years plus 2, etc. But I think it is, but it's also a plus for funds in this space to have multiple ways to get returns, and which is unseen in the traditional space, whether you can sometimes stake your locked tokens in a way to get a yield, or you could have various exit mechanisms for your tokens prior to vesting schedules, or prior to the completely vested for our tokens. So for us, we usually have a way to deal with the projects before we sell, actually, and we tend to, if we know that the fact is we are investor, no matter how much you believe in in the space, you have to make returns, and that's a primary objective for an investor. So either we agree, if a large sum of investment, we either agree with the project beforehand for how we sell it, whether we sell back to the project, whether we do an OTC with one of the larger player in the space who want to buy the tokens, or even pre-investment, whether we want to take a TWAP on some of the tokens once it's listed, and how's the time frame. I think at the end of the day, it's about transparency because we both win together. The project get bigger, the investors win all together. So it's about transparency, which is quite lacking in this space. You'll be surprised that it's a crypto space, should be in blockchain, everything on the blockchain. But I think things are just intransparent a lot of times, and kind of some of the investors just could be ruining the project. But I believe all of us here are not those investors.
That's great. So as it seems like most of you do, kind of what Leslie was saying, you kind of angel and then list. So you're very early into these projects. What kind of value add do you provide to the projects, and what do you see kind of that is missing for a lot of these projects in terms of funds and investors adding value to it? Is it more intangibles like community, or is it more physical like developers, like tech side? What kind of, how do you guys see that value add in terms of what you guys provide, and then how do you see the value add really developing with these funds? And I think I think a lot of these funds become far more professional in terms of like they're really looking to scale up a lot of these projects. How do you see that developing?
I think there's some kind of religiosity when it comes to thinking about VC, because for whatever reason, VCs are seen, rightly so, as centralized, right? So people are like, oh, these are intermediaries, right? So to me, I think the thing that is important about your question is that it isn't that all intermediaries are disintermediated. It's just that the value, a value adding intermediary is just a peer that you've consented to transact with, right? And so to me, when we talk about like GCC, I think all three partners have founded and exited companies. We've some to unicorn scale, and so for us, we're very much operators first. I think the other thing that's really important is that there are certain specializations where we do it every day, all day. For example, things like liquidity formation, capital formation, right? A lot of times these founders will be really expert in the vertical domain or technology expertise, but in a sense, the kind of development of liquidity, and these types of things, I think it's much more beneficial for people who focus on doing that every day, all day. So for us, we have a whole host of usual suspects that we work with to build out liquidity. And people who don't understand liquidity, just think, oh, well, I'm just gonna like make a cool smart contract and it'll come automatically. But it sort of demonstrably doesn't do that. Like we recently had a really great network launch of Vega protocol on CoinList, and we managed to kind of sell that one out. And we just like to see the right networks and participants engage, to really bring our networks into their full potential.
Yeah, this is one I feel passionately about. We want to come in as guys who do like help with the dirty work, help with the grinding, and are the product users. So our team now has over 10 people. I'll give you an example of some of the things we do. We're kind of full service. It really depends on the project because we look at a lot. So we have a master of ape who's from Huobi DeFi Labs. He knows every single project out there. He trolls. He follows 1,500 Discord channels and knows what's going on in the market. We have a product manager who used to work at a large crypto company. And if you need testing on product, we test. You have an alpha, give it to us. We'll come back with a report with our views on it and other competitors in the space and how they compare. We have an expert in sort of setting up entities and so on. So if you ever have questions, we can tell you what other guys have done, and we can review documents for projects as well, because sometimes they don't have time to do that. I myself am a structured product and trading background, and exchange background. So when it comes to liquidation mechanisms, margining marketing mechanisms, we have an expert there too. And and we also work closely with influencers and marketing companies. And so we basically have a whole range of experienced people. And of course, Genesis Block is an OTC desk. So on trading matters, if you want to ask about market makers, what's a good market maker? I mean, I worked at Binance, so at least I can tell you maybe if someone trades more or less. I mean, doesn't mean if they're a good market maker or not, but just expertise like that. So we try to help in many ways. Different projects are different, right? Some guys are very technical, but they don't know how to design UI, and that's why we have this product manager. They also don't know how to market. There are some guys that know how to market, but don't really understand the product. I mean, honestly, right? These are angels. They're not coming in with like a really experienced 20-person team, and so we help them design the mechanisms of some of the things as well. So we are sort of full service and full stack in how we help projects, and it really depends, right? I mean, to kind of harp on another point, if you come in and say, well, if you help us with marketing, here's a tiny allocation, what do you expect us to do? We have some other ones with which are much bigger that we're much more involved with, where we help on a much deeper level. So it really depends on the project almost, but we're able to help everywhere.
I actually had the first-hand experience with Leslie at GBV because projects that we incubate before, including linear finance and convergence finance, GBV was investors, and we actually experienced some of the help that GBV provide. So I think there's a key difference between investors who are purely investors in the traditional VC space versus investors who are executors in the crypto space. Like us, as we incubate companies, we usually look for investors for our portfolios, and GBV actually seeded both of the investments, and there's a reason for us to have some of the investors on board. Usually there's three types of investors that we're looking at. The first type is really, and no joke, is about branding. There's branded investors who I'm not going to talk about names, but they probably don't do anything. But a lot of times they could make very meaningful introductions. So if you want to have introductions to really impactful figures in the space, those branded funds can help you. The second type of investors are really on the ground. They help you to look at your product. They will give advice on protocol design. They will make a lot of introductions on, give you advice on which exchange to get listed, which market maker to use, whether you should list on the first day, which ideal platform to use, how's the market, etc. Those are the second type of investors that really provide hands-on value add every day, and you are not. I'm not shameful to reach out every day to these projects to ask for advice, to these funds to ask for advice. And the third type of investors, I think, is really about bringing the community to the project, and there's no denial that I think communities always matters for crypto projects. They are the users. They're the one who really back up your project. So for funds or investors who have that affiliation, who are trusted by communities, are also one of the targets that we look at. So over the last 12 months is such a short time, but I see this switch in kind of the priority for investors. So probably in 17, every project look for a branded investors and give them the seed round. But I see those who provide value add and more influencers or community-driven funds actually have more allocation at the early stage now, because that's the real needs for a crypto space to go mature. And kind of every bull market and bear market cycle, I see there's an emergence of a different type of investors. So I'm not sure which type is it for the next one. I'm looking at currently traditional influencers. So those who have TikTok influencers, gaming influencers might be emerging the next wave, not just purely crypto community side of things. But it's a very exciting space to see how investors emerge, not just about projects.
Yeah, that's very interesting. I mean, obviously the value add, I think, as you could see, it's very wide ranging, and that's the beauty of crypto, is that people can come together and work together on these ideas and really help in the way that they could. That kind of leads to my next point, what Adrian was talking about, the community being very important. What do you see with these newer projects in particular? When you guys are looking to provide the value add, what is the difficult part that it seems like they really need? Kind of as you talk to these new projects.
Well, I can probably start first because Leslie, you want to go first?
No, after you. After you.
Yeah, I think it is the challenge is the community is getting more educated, much more educated than before. I think in 16, 17, the early days, you basically a lot of shielders, you just have a lot of shit coins promote to communities leaders and the community just buy it basically. I remember in 17, projects without any lockup can go 50x, and that's purely a demand from the market. To trust the community leaders. And now I think the space, and probably Leslie will know more than I do in the community space, but from a incubator perspective, I see community leaders are much more advanced than before in terms of knowledge level. First, because they are scared they are shilling shit coins to the mass audience, and then at the end of the day they're being blamed, right, for that. And the second is the space is overall getting more mature, and there's a lot of knowledge, a lot of things that we have to learn in DeFi to make someone a KOL in this space. So I think the challenge is always about how to navigate the KOLs or influencers representing the projects. At the end of the day, I also feel that there is a divergence, not just divergence of type of leaders in this space. And someone came from traditional finance or from Perify could be a KOL, but they're talking about different things, more about the project mechanics. And someone could be really driving demand for users because they know a lot about the characteristics of the users. Also could be KOL. So the KOL space is huge, and I think it will continue to be huge because it's crypto.
Yeah, I think the difference nowadays is, you need your game to be good. This is not like 2014 or 2015. You need to be well-rounded. So if you think the tech is everything, that's actually not true, because a lot of crypto is disintermediating the middleman, right? So you're directly going to the individual user. You really need to know how to engage them. There's a lot of people that know very much how to engage and they're influencers, and they want to start a project, but they got to have the long-term product and innovation that gets them surviving more than, say, the first month. And so a lot of what we try to do is try to round them out. You know what I mean? You rarely get teams that are rounded out. If the teams are rounded out, they're raising 50 million from Mark Cuban, and what's my value? They don't, at least they don't think we have the value add, and so it's a different story, right? That the projects that we work with, they're normally maybe weaker in one aspect, and we try to help them work on that. It sounds easy to be a tech guy and say, I've just got to hire a marketing guy, or you're a marketing CEO and you say, I just hire a tech guy. Often that doesn't work, and so we do a lot of sort of educating and helping. We try to get them. We're angels, right? We're angel investors, right? So we basically guide them on the process. If you need help on BD with projects, here's a guy, he'll work with you. If you want to help on UX UI, here's a guy, he'll work with you. And so that's how we just try to round the project out until they can sort of bootstrap themselves to the next level.
Yeah, so I think on our end, one of the things that I think is happening in capital formation is we're starting to see some really novel entrants, right? So in our portfolio, one of our investments is with Celsius Network, and they I think the last reported number was about 21 billion in community assets that they manage. And the thing about it is that it goes up by $1 billion every week. And their yield output is about $1 million that they pay out every week. So, it's a very robust community, and one that I think is not that well known, even though they're doing huge liquidity provision within the DeFi space, right? So, we've developed portfolio synergies across Celsius, Into the Block, and Credo Networks, and a whole bunch of other projects that are in portfolio where we do have, a little bit of what we call the Keiretsu effect, which is, basically allowing our portfolio to do successful interactions with one another. So, I think that there is a liquidity bootstrapping effect. I do think that there's some really interesting ways to create a very robust liquidity, and I think that's kind of in a way an important function, with respect to kind of engaging capital. I think the other specialization that we tend to focus on as well is sort of geographic access. So we have 2 partners in Silicon Valley, 1 partner in Tokyo. So, that's a fairly unusual geographic configuration, and it's one that kind of bridges some very important markets. So I think people think of DeFi as maybe being non-geographic, but it turns out liquidity is geographic, and social networks are geographic still.
And when you guys are looking for these new projects, do they come to you? How does that process really work? Because I know in the past, 2013, 2014, you would go to Bitcoin Talk and you would find all these new projects. How does that work nowadays? And how do you kind of continue to build up, whether it's your deal flow or contacts, to stay on top of these projects? Because it seems like a lot of these new projects, they come out of nowhere and they're already fully funded. The money is plentiful. Obviously, I think the value add is a different story, but how do you stay on top of that?
I mean, there's way too many projects. So it's impossible for any one fund or person to actually stay on top of all the projects, I think. Especially as you start to see chain diversification. So you start to see DeFi running on top of multiple blockchains, right? So there's a lot of moving targets, to be honest. For us, we definitely have folks, we're sharing deal flow with us, early stage funds and our friends, so there's a lot of things that we can do to expand our deal flow. But in some cases we just do cold outreach, where we just find appropriate interested segments based on our kind of robust thesis development, and we just go actively out looking for certain things. So I think that's another approach that we found to be pretty fruitful. And that's what got us into Stakewise. Is we just said we'd like to see radical improvements in the financialization of Ethereum to staking. And, we had some very clear parameters around what we wanted to see happen. So, that was just part of a aggressive outreach on a thesis.
Yeah, there's lots of different channels, and we have to find them all. I think firstly, we farm ourselves and we're power users. So if we see a project, we like it, we just reach out to them on Twitter or reach out to them on Discord. Anime character sometimes helps. Also, I think a lot of it is word of mouth. Projects have known that we actually do help them on certain things, and so they introduce other projects to us. And also throughout our marketing, it's interesting because we don't have any LPs. So if you look at traditional VCs, I feel like they're doing a lot of marketing to the investors of the fund, right? But we're actually trying to market to two classes of project. I mean, we're trying to market to projects and say, please come to us, and also to other funds, because we can help in certain ways. So I think a lot of it is word of mouth and hard work and having a reputation that you can help with certain things.
I think the fact that I'm here is because it's super competitive for investors to get allocation in crypto compared to traditional VC space, because there's a geography issue. Because if you are, say, I'm based in Hong Kong, for a traditional startup, you usually just reach out of Hong Kong VCs. But in crypto, whether you're based in Hong Kong or San Francisco, you can reach to global investors, and that's a necessity for investors like us to promote the brand and how we can help out portfolios. So I agree with Leslie that there's a lot of work that sometimes we have to do marketing, not just to the industry, but also to the projects. So it is also increasingly, it's also surprising for me when I joined the industry, how much networking is required among investors. Among investors to share a deal flow and to keep a very good relationship. So when the projects, even it's not publicized, we are already at the first dip in a seed round. And obviously, the promotion of how we provide value add to the project is really something that we're still trying to navigate in this game. So word by mouth is definitely required, because there's not a lot of value-added investors in the space, to be honest. It's just few of them in every geography. So you want to be the few of them to attract the projects early stage, but not in the late stage of the fundraising.
I wish we could keep talking for hours, because the words of wisdom are great, and I'm getting so much alpha just from how you guys think and how you guys see the space. But I think to end it, and for those watching the talk, what are some words of wisdom that you would give traders and investors, especially in the DeFi space, on how to how to find the assets that you guys invested in the angel round. What words of wisdom would you give these individuals?
I mean, first of all, like I'm kind of an open book, right? Like a lot of the great conversations I'm having about DeFi, I have it on my show, and you get it kind of almost as quickly as I get it, so in a sense, I'm quite an open book. Oftentimes I ask these founders and leaders in DeFi, I ask them what projects they like. So you're hearing it straight from their mouths, so in a sense, like, it really about that openness and transparency, I think is super important. I think with respect to any sage advice I would provide is what's been proven time and again consistently over the space is that a long time preference beats a short time preference. So like, stop being in a hurry to get rich. It's a great way to wreck yourself. You really have to just like take a measured approach, take your time, and like, know what you're doing. I think Andre Cronje famously said that DeFi is money flowing from people who don't know towards people who know. So like, that means you better make it your business to find out. I mean, if you don't know where the yield is coming from, it's coming from you. Like, you're the yield.
I think for the everyday person out there, it's always hustle. Don't let anyone say you can't do it, and ignore all the old conventions that you think are stopping you. Look at all these guys look at the Lau twins, look at all these guys that are just like 18, 19, 20 years old, and they're doing very well. If they can do it, you can do it too. Just hustle and don't let anything stop you.
Well, echo on what Miko and Leslie said. I think it is increasingly surprising for me for anyone to quickly climb up the ladder in crypto space, not just as an investor, but average individuals that came out from college or various industries. So I think it's really about everyone in the crypto space. I guess they trust the impossibles, and everything is quite possible in this space. And I think I experienced that myself when we kind of incubate project, and I believe everyone can, as long as they want to learn, they could be a key influential leader in this space.
Thank you. That was great. Thanks, Adrian. Thanks, Miko, and thanks, Leslie, for participating, and thanks everyone for watching this Investing in DeFi panel.